Good morning. Welcome to Trading with Larry. Unfortunately, Larry can't make it this morning, so you're joined by myself, Eric Shamlo, and Mr. Clint Brewer, Larry's right-hand man. How are you, Clint? Haven't talked to you in a long time.
Yeah, it's been a while. I'm good. It's good to be back on the show again.
Very nice, very nice. So interesting markets. Obviously, we feel like we've been consolidating over the last 3 days after a big 300-point run-up from the lows last week into year end. Maybe we finally get that seasonality everybody's looking for. So, what are you thinking here? How you guys positioned for the rest of the year with your products?
Yeah, well, one note on seasonality. So this tends to be associated with a favorable stretch of seasonality. But when you look at December a little bit more closely, the first half tends to be very choppy, very kind of sideways trading action through the first couple weeks, and then market finds traction in the final 2 weeks. So just something to watch, maybe keep in mind, especially with the heading into the Fed next week. One thing that I would be watching right now is some of the action that you're seeing under the hood. So, we had the sell off in the S&P from late October into about a week before Thanksgiving, and a lot of AI tech names were leading to the downside. So the S&P had a drawdown. I think at its max it was like a 5% pullback, but you had the Nvidias of the world down a lot more. Well, those have been here's what's interesting. Those have been slower to recover. If you look at Nvidia, if you pull up Palantir, like they're all testing their 50-day from below. So they've not they and Nvidia is barely going anywhere. But in the meantime, you've got the S&P 500's advanced decline line making a new high, and here's why that's kind of significant. So the AD line, think of it as just tracking the average stock in the S&P 500. So if you were to look, or maybe just think of it as an equal weight index. So instead of a cap weighted where Nvidia and the top 10 names in the S&P are 40% of the index. In that scenario, the other scenario is, what if you look at everything just as an equal weight on average, and that advanced decline line is making a new high. It's making a new high ahead of the index. And so I think that's, in my opinion, for the here's where it diverges. For the average stock, that's bullish, I believe, looking into year end. But the index action, it's bearish if you can't see these names like Nvidia catch up because they're such a big component in the index. I mean, this is exactly what you saw during the internet bubble. In the early days of the internet bubble, when it started to burst, you had smalls and mids, especially on the value side, were just absolutely ripping, while the S&P 500 and the Nasdaq were selling off. So I would pay close attention to that, because if these are the early stages of, called the bubble unwind, that would be the type of price action that I would look for.
Yeah, definitely. Before an unwind, you see leadership trail off. I think this episode was kickstarted by the mutual fund fiscal year end that happened end of November, and it all kind of coincided with the drop off in liquidity and the market thinking we may not get a rate cut, and all these things in confluence. I think got the market a little wobbly, but definitely seeing the rotation out of that. Now, what do you make of the rotation in terms of um, is it always a bearish signal? Uh, if for me, it's what there's several other questions after follow up questions to rotation. What kind of rotation? To me, it could be a positive thing because the market is much less myopic and much less focused on the Mag 7, and maybe they're finding opportunities elsewhere. So in 2021, at the end, we started to see that unwind. And then during the bear market, it was all like commodity stocks that were leading the way, right? A lot of them are classified as value. But there's other kinds of value. There's home builders. There's a lot of stuff that's kind of beaten down. There's healthcare. And a lot of these sectors that are labeled value, but I think are actually cyclical in many ways, are leading. So to me, it's like maybe the market is just less myopic and potentially finding growth opportunities in some of these other names. So like what I'm noted, like I mentioned home builders, I've been mentioning home builders. Uh, that's been doing very well. Uh, Healthcare obviously continues to do well. Energy too. You and I were talking about energy before we went on. So it's like it's it's a lot of different beaten down sectors, kind of all stepping up at the same time.
Well, what do you think about? So I know when I've been on before, we talk about quant factors a little bit. Does it feel like to you? Does it feel like a momentum unwind? The things that had been working really well are getting thrashed, and the things that had been lagging. Like I know healthcare at one, home builders looked terrible there for a while. Healthcare looked pretty terrible there for a while. Is this just a simple, end of year rebalancing out of the things that have been doing really well and into the things that have been lagging?
Well, healthcare has been kind of rebounding for a while now. I think recently it's been accelerating as this rotation is happening. Uh, but what I'm seeing within the factors is a flight to quality, like quality stocks, even within the sector. So, like, if even when you look within tech, like you'll see Adobe outperforming other tech plays, and you kind of you divide that up by quality metrics like free cash flow, and that's a very nice way of kind of dichotomizing the performance where you have those with high levels of free cash flow outperforming those with low levels, and so you have a lot of tech
Yeah.
plays that. So to me, it's like it's a quality rotation. I'm not sure it's a fear rotation. I think those are two different things.
Yeah, I think. Well, so one area. I mean, if you want to look at the kind of a poster child for speculative plays, and then what's going to get left in the dust when you see a flight to quality, look at the quantum computing stocks. That those are just. I mean, that's kind of a microcosm of the rest of the space. But when you look at non-profitable tech, and I think so, this plays into a really, really important theme, and I think this could be one of the most important drivers for the market heading into next year. And it is what I think is impacting all these stocks, especially call it tech with no profits or very little profits, is the outlook for rate cuts. So I think you mentioned it just a minute ago, but the whole pullback in the market started when the outlook for a December cut started to shift. So in late October, odds were running kind of where they are now. They're like 90% in favor of a cut in December. And then through the first couple of weeks in November, it fell to a coin flip. Or at one point, odds favored no cut at all. And as those odds shifted, that's when the market kept pulling back more and more. And I think so. We actually just wrote this up. If you're watching this, if you subscribe to One Ticker Trader, we're getting ready to release our monthly update this week. And what we do is we go through, we break down what the market's doing, we break down key macro themes, and we go into trade tickers that we're watching for trade ideas. And the big theme that we focus on for what's impacting the market right now is exactly what I just mentioned. It's this shifting outlook for rate cuts. And if you line up a chart of the S&P and the odds for December cut, they're moving inverse.
I'm actually trying to do that as you speak.
Yeah, so we're breaking down that relationship in this report. And here's the thing, like that's the market. The market basically threw a fit over whether or not the Fed was going to cut in December. So like imagine if all of a sudden like the entire cutting cycle gets called into question, which I think next week there's a really good chance of that because there's no reason for the Fed to be cutting right here. You can make a good argument that rates are in neutral territory. We could talk about the inflation outlook, but the other thing I would note is that financial conditions overall are running much looser than average at a time when core inflation's at 3%. Like the last time core inflation was at the Fed's inflation target was in early 2021. So they've missed the mark for a while. you're not really, maybe there's some cracks in the labor market, but I don't think it's unraveling as quickly as they feared. So if they throw cold water on the rate outlook, we've already have the proof from the sell off from October into mid November. You know, that to me that tells you the most important factor driving the market right now, especially growth stocks, non-profitable growth stocks, and the AI trade is coming down to the rate outlook.
Yeah, I agree 100%, and I think the data agrees with you. I don't think there's an argument to be made. I mean, look at the chart. It's like, especially, uh, especially
So,
through November. I'll just zoom in. I mean,
so
up,
explain. So I have a hard time reading the lines. Can you explain for viewers, explain the chart really quick what you're showing?
sure. So top line is your Fed rate cut probability according to the Fed swaps. So that probability got down to like a mere 30% by November 19th, and that was pretty much the bottom of the market, right? Down here is the S&P, and it's a very correlated relationship over the last couple of months.
Yeah, that to me that is the number one factor that is going to that's going to keep driving the market. That wasn't an isolated event. And again, that was the market losing its mind a little bit over whether or not the Fed would cut rates for the third consecutive meeting. If you throw the whole thing into question, that's where, in my opinion, the tech trade, the growth trade, the AI trade gets into trouble. The good news is that kind of your comments on flight to quality. I think that maybe speaks a little bit to the issues facing the Mag 7 and the other 493 and the S&P starting to turn around a little bit. So you can't. I think if you are someone who's done really well by buying and holding SPY or the Qs for the last couple years, and you think it's become easy and all I got to do is that, I think you're in for a pretty rude awakening next year.
Yeah, yeah, definitely. The rate cut expectation has been driving things, and it's interesting. First, December 1st marked the end of quantitative tightening, right? So I think that also the anticipation of liquidity improving at the Fed bank reserves uh, plays into that as the market is. And look, they're going to get a rate cut. I'm not sure why they're cutting rates either at all. Like we just actually had a jobless claims number which came in better than expected. I don't think that's going to change the outlook for this rate cut. The only concern, so again, I have two macro concerns for this month, for the remainder of the year. One is, as you said, and as we just showed on the screen, the market has been very correlated to this Fed cut expectation. So we're going to get the rate cut probably. Um, Question is, has the stock market already priced that in? Because the stock market could price these things in pretty quick, and we're seeing how the market already rallied on that. So I think next week will be very interesting. And then you have the situation in Japan with their yields continuing to go up. I was trading last night, and you had a Reuters alert come out that the government is okay with a rate hike over there. So it looks like Japan is going to raise rates this month. So that's something to circle on the calendar as well, I think.
Are we looking at another carry trade unwind event from the summer of 2024?
I don't think so. I brought it up with Larry yesterday. I don't think he thinks so either. But you never know. I remember the December Fed meeting last year. The straddle that day, the straddle right before the Fed meeting was like 20. So the market was expecting an absolute nothing burger from the Fed, and we wind up dropping 220 points. So I don't think you could ever be 100% comfortable with the market. Anything could happen at any time. And somebody on the chat is asking what's yours and what's my favorite trading strategy. Whatever trading strategy I use a combination of a lot of different ones. But you always have to kind of pencil in what is your exit strategy if you're wrong. You know what I mean?
Yep.
So anything could pop up at any time. But those are the two biggest risks from a macro point of view: is whether the Fed rate cut is already priced in, and what happens with the Japanese rate cut.
I think what's going to be really interesting is that, I would expect, Powell next week. So like Powell's come out and called these rate cuts that they've done already risk management cuts, right? So there's some concerns about the labor market. He calls them risk management cuts. So, you know, he can't keep doing that and calling them risk. At some point, they have to be done. So even if so if you look at CME odds, there's a 90% chance that they cut next week. I say, okay, they cut next week. I would expect Powell to basically talk down expectations for more cuts going forward. There's 3 cuts in total being priced over the next year, and then they're expected to be done. But and while Powell maybe in the past could rely on that type of forward guidance, how are investors really paying attention to him? Is the market really paying attention to him? Because his term is up in May, and you've got a guy, who a favorite to take over that role right now, is close to Trump, and has voiced, they've voiced their concerns that rates should be much lower than they are right now. Now, obviously, one person isn't going to control the entire Fed board, but obviously the chairman can influence and try to stir the direction that they want them to go in. So there's going to be what I think would be interesting is if you get this really big disconnect between what a new Fed chair wants to do versus call it a revolt in the market on what the market thinks they should do. Because if you keep getting, we can talk about inflation here in a second, but like if you keep getting inflation moving the wrong way, I remember if you remember the whole bond vigilante thing in the 1990s, like do you get a return of the bond vigilantes coming back and forcing the Fed to have to tighten policy here? I think that's kind of that's a sleeper scenario I'm watching for next year, just because there's a lot of uncertainty around the Fed, and the Powell leaving, the pressure to cut from a new chairman coming in, and so on.
Yeah, I don't think people are talking about this new Fed chairman coming in enough. He's going to be a dove, although Trump put in Jerome Powell, and I don't know how to classify Powell. Is he a dove? Is he a hawk? Uh, he's just kind of been late, right? That's why Trump calls him too late Powell. But this new one coming in, you think the market, like, when is the market going to start pricing that in? Um, and he's coming in at the middle of next year is going to get interesting because we're going to get the new Fed chair, right? You're going to have the midterm elections. There's going to be a lot of stuff happening.
Yeah, here's a scenario that I can see unfolding coming into that is that there's going to be a lot of buildup and anticipation over a new Fed chair who, as you said, is going to be a very dovish person. But I could see a scenario where you have inflation becoming a really big problem between now and then, which is going to make it hard for whoever comes in to remain dovish from that regard, because signs are everywhere. And so, like, look at I don't know if you're able to pull up a chart of copper, but not US, not the HG ticker copper, but a globe LME copper. So LME copper is a better global benchmark, and it's breaking out, and it has one of the highest correlations to longer term inflation break even. So there's a warning sign. Guess
Copper, that's why
Dr.
they call it.
Copper, yeah. it's a good sign for the, call it a positive for the economy, but the flip side of that is that it's highly correlated to inflation too. So like that's a problem. Gold mining stocks are highly correlated to high and rising inflation. We know what those have done this year. Energy stocks are highly correlated to high and rising inflation. Watch, XLE, watch energy sector ETFs, because those have just been grinding sideways and those are close to breaking out. So you're getting all these market based warnings, in my opinion, on inflation. At the same time, you get these PMI reports, so these purchasing manager indexes, and there's a lot of them out there. The ISM gets a lot of the attention. Well, the services ISM, they ask, one of the underlying components of this is they ask about pricing pressure. So the prices paid index, the prices paid component hit 70 in the most recent report. That's like the highest level since 2022. CPI peaked out at 9% in 2022. So it's just, all these warnings are there. So for the market's going to be very confused on a new Fed chair that's very dovish versus if you get the economy grinding sideways, not collapsing like they fear, but all of a sudden inflation's taking off. That's going to put the market and the stock market in a very tough spot.
Yeah, because the commodity index has been up, but there, like I know a lot of people are saying are looking at the commodity index, and I know how it leads the CPI, which it does absolutely. But I think there's a difference between like the inflation that we talk about, where you're going to the store and groceries are 100% higher and visibly going up, like they were all throughout 2021, right before we hit a bear market and they had to start raising rates, in financial inflation. So right now, I kind of think it's more financial inflation. Like what's been leading the commodity index has been gold, silver, obviously copper also, as you said. But those are metals. Like oil has been completely subdued. Agriculture has been subdued. So far, this commodity move has been kind of metals. I think unless oil can can start going up, maybe we don't get that so fast. But 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 on the other hand, I'm gonna pull up this yield curve chart, which I think is very interesting. To your point, okay, and here's the yield curve. These are different parts of the yield curve that I'm tracking. That arrow is pointing to that last Fed meeting, and to me, it like I didn't understand why the yield curve was going up after Powell said we might not cut rates. That was counterintuitive because if they're going to cut rates, shouldn't that yield curve flatten more? It had the opposite effect. And when he said we may not be cutting rates, I think the market started to sell off on that. That was the initial trigger. And it was almost like the market was saying, no, you will cut rates. We will tell you when exactly you will cut rates. And you are going to cut rates. And because you're going to cut rates, our long term inflation expectations are going to go up because you're going to add that liquidity to the system. You're going to needlessly cut rates and you're going to cause the inflation that you've been trying to control. So maybe I'm making a little too much of that yield curve move, but to me, it was a little bit counterintuitive. And I think it's the market starting to price in some inflation for next year.
Yeah, I think inflation will be a key theme, and yeah, to your point on the commodity indexes, you know, oil is definitely one to watch because oil dominates the broader commodity indexes. So I think in the S&P, the GSCI is a popular one to watch. Like it's, I think close to 50% oil derivatives like gasoline, diesel. So that's definitely one to watch. We've actually, so oil and USO ETF that tracks oil has been one of our trading themes for pretty much all year, and we've done really well. We've done pretty well with USO. I mean, last time we traded, we had in October, we had both a call and a put that we closed out for gains for subscribers, and we when we're writing up the theme this month, I think oil could have, and I know Larry, I think it's been a couple weeks since he talked about it, but I know he had a bullish tilt looking at oil, especially around this 50, or at least, around this $57 per barrel level. And it's because there's all these fears over a supply glut, right? So I can't remember one of the forecasting agencies is saying like next year we could have a oversupplied market to the tune of 4% of demand or something like that. But the flip side of that is with oil at these levels, and it's been at these levels, grinding lower for a couple years now. It discourages investment in new production. So oil right now is right at or below break even for U.S. producers. It's well below what OPEC needs to see. So many of these OPEC nations rely on oil to for their state budgets or their federal budget, so to speak. So they're the low price of they're not staked to seeing a low price of oil, and the price right now is discouraging new production. Oil rigs, I mean, the rig count in the U.S. has been cut by a third in the last couple of years. So I think eventually, I think that starts to maybe catch up, and you start to see a floor. It's really interesting where oil's at right now. So that 50, if we're still at that $57 ish level, that's been a level where we've seen oil rebound the last few months. So I would keep an eye on that level. But yeah, that's one that if you do start to see oil go higher, that's one thing that could drive these broader commodity indexes to start to break out.
So it's interesting you mentioned all that because oil's kind of, if you're trying to get long oil, it's kind of a, I don't know, a dead trade. But some of these, look at Diamondback. I mean, maybe some of these energy stocks are a better play than like the actual commodity itself. Diamondback, technically very. I mean, I love the setup where these moving averages start coiling and then it just rips to the upside. So that's what I'm seeing in Diamondback. And take a look at EQT. Natural gas, I think, hit $5 per million BTU for the first time in a very, very long time yesterday. EQT looks good to me as well on the energy side. I'm in both names. Um, so I'm hoping for a little rebound in commodities. Let's
Yeah, I
go.
think
You know what I
I
mean?
don't know if you can pull it up, but another one to watch is IXC.
Ooh, interesting. I've never
So this is
traded
a
I shares.
global,
Oh, global. Okay.
yeah, this is a global energy ETF, global exploration and production companies. And if you look at like a 3 or 4 year chart, this thing's coming right back to the prior all time highs. So I would, this is one where if we start to see this break
Validating
out,
for like 3 years. Yep. Yep. I
yeah.
see that.
So that's one to keep an eye. Like again, so take all these, call it market based indicators, market based signals, because that should be an ETF that's sensitive to inflation, right? So you see IXC and you think about oil. Well, think about inflation too. Like these are sectors highly correlated to rising inflation, and so if you start to see IXC break out, I mean that's telling you something what the market thinks maybe about energy company earnings, but it's also a potential warning sign on the inflation outlook.
Yeah. The chart pattern that we just showed you, IXC, Diamondback, EQT. I'm just saying, like we were talking about rotation, that these chart patterns I'm noticing in a lot of different kind of sectors, like we were mentioning before. Home builders is one. Toll Brothers up again pre-market. Um, so I like that sector as well. The chart patterns themselves are starting to look very similar in some of these, let's call them forgotten sectors or beaten down sectors. But we were talking about rotation, and like not every. Have you been seeing Tesla lately? I mean, it's been absolutely going crazy to the upside. I mean,
Yeah,
the way uh,
I was gonna say. I mean, I've been tracking, both the swings in both directions. I mean, every time, it's come back to, I think it's that 490 level, which is close to the prior highs. I mean, we've had some bearish setups and pullbacks off that level. I mean, most recently when we got back up there at the start of November, there was we wrote this up. There was a bearish momentum divergence on the RSI, and you eventually saw Tesla pull back pretty sharply with the rest of the market into mid November. But yeah, now we're seeing a strong rebound again. I mean that four call it 470 to 490 area is just it's so that's the prior record high, and this is the second time in the last couple months that it's been rejected off that level, and it looks like it wants to test it once again.
I hope it does. I hope it does, my man. Let's go,
Elon's
Michael.
got to get his $1 trillion payday.
Yeah,
He
you
needs
know
to,
what? Yeah, that $1 trillion payday thing. When it was trading like when it was dropping below 400, like around that time, and they took the vote on his pay package. I felt like after they gave him what he wanted, I felt like Tesla should have rallied then, and it gave you like another week of weakness, you know, and then it just kind of that was a fake out, and I love that. You have a failed breakdown. I love those failed breakdowns where the news is bad and then price just goes up in everyone's face. The bears start pulling out their hair. They start citing fundamental facts that don't matter anymore, and the stock just goes up. I
yep,
love that.
yep.
So yeah, I'm hoping for 75. I like when bears cry, but I like when bulls cry too. Everybody gets really, I feel like, emotional to one side. Like the market doesn't do what they want, and then they get emotional about it. That's a big no-no for trading. In trading, you gotta be like Bruce Lee. You gotta be like water, right? He said
Is
you gotta be
there
like,
is there anywhere that's been on display more than crypto right now?
ooh, that's right. Crypto has been a big bust, but is that does that mean crypto is going away forever, or is that more of a technical, liquidity driven
I'll
situation?
I know you and Larry were slugging it out yesterday over crypto, so I'll add my 2 cents on what I think is going on with crypto, and it's simply this: crypto is a speculative asset, and crypto is getting hit harder on these shifting rate outlooks than the stock market, and I think that's all it is. I think the most speculative stuff in the market is the most susceptible to the rate outlook. You've seen that, and again, call it non-profitable growth stocks pulling back as the outlook for rate cuts were shifting. Well, that pretty much coincides with when crypto was selling off. And if anything, I think crypto. Look, if you want the real value in Bitcoin, in my opinion, if you're a stock market investor or trader, is that Bitcoin will often lead what's happening in the markets. So, like, Bitcoin refused to make a lower low during the trade war sell off into April. It basically made a double bottom and started rallying. Like that, that's a positive signal. Bitcoin tried to break out to a new high in early October, and you talk about failed levels, failed breakouts or breakdowns. That was a failed breakout to new highs, immediately reversed lower several weeks ahead of the top in the stock market. So follow follow Bitcoin's price action, and if it's shifting trends for clues on to what the market might be doing. But I think the big picture though overall is that the same stuff driving speculative stocks is going to be the same thing that drives crypto, and that the biggest factor right now for all of that is this outlook for interest rates.
Yeah, I would agree. I would agree. I think crypto is particularly sensitive to that. Um, I'll tell you what, though. gold is up what 50% this year, and Bitcoin is down. And I'm still of the mind that the two together, as a both long, are a good addition for long term over the next 5 to 10 years. I use this dip in Bitcoin to, I trade my family's account, and I've been predominantly just trading gold to the upside on that. For the first time this year, I've put in some BTC in there. So I like that pairing. When I'm using this uh, as a way to start accumulating from here. Interesting Nasdaq here trying to break out. It's been you look at a chart of the Nasdaq. It's been trying to break the highs over the last couple of days several times. It's right back up there as we speak. I mean, at some point, where are we going to get? Where are we going to get that nice one standard deviation upside move? You think that's coming today?
I don't know if it's coming today. I think. I mean, look at again. Kind of, we started the podcast with this, but look at Palantir. Look at Nvidia. I know I'm cherry picking a couple names here because other names like Alphabet have been strong, but some of these prior leaders in the AI trade are struggling to get any traction, and that just that's going to really weigh on the Nasdaq. Given the top 10 in the S&P 500 is 40%, one of the top 10 in the Nasdaq is something like 52, 53%. And if you can't get those names to get traction and rally, the Nasdaq's not going to go anywhere. And if
Well,
anything, what's that?
Meta gaining some traction here before
Yeah, I saw
pre-market.
Meta's up pre-market. If one thing to watch on QQQ right now, I don't know, I haven't seen anyone talking about it, but maybe voices will grow louder in the days ahead. But QQQ actually looks like it could be setting up a Head and Shoulders type top. Now, whenever those patterns become obvious, it's obviously wrong. So if everyone starts calling for a QQQ Head and Shoulders top, be on the lookout. But right now, I mean, it's got so far, if we roll over right here, that is a lower high in place relative to the late October peak. And we're down, like you said, we're down a little bit pre-market.
Are we down? No, we're now up pre-market because of Meta.
Yeah. Oh, I'm looking at
Meta
the quote.
Meta's up 6% here pre-market. There was a headline: Meta shares jump on plan to cut back metaverse spending. It's funny. Metaverse. That was a funny one.
I mean, you talk about, I don't know, what was that? That was around 2021 or
Yeah,
2022 when
yeah. That was
pandemic
like when.
struck.
Yeah, that was when the market was a peak idiot.
Do you remember they were selling real estate in the metaverse? Like you could go, but like who in the world bought real estate in the metaverse, and how much is that worth right now?
there were people. There's a lot of foreclosures, I guess, in the metaverse now.
That's right. Yeah.
So gold popping a little, gold going off the lows a little bit here. Um, yeah, I guess this meta news was a fire starter for this morning. So let's see if there's follow through there.
Is there
Uh,
anything you're watching really near term heading into the Fed? You see any trades stand out to you ahead of the Fed?
I'm trying to go long bonds, and it's been a little not a pain trade, but the Thanksgiving break took my profits away. So like I'm break even on my bond position. I'm trying to get long, uh, and that trade was working out. And then over Thanksgiving break, uh, all the Japanese news started to come out, and I feel like that got our bonds lower as well. So I'm trying to get long bonds into the Fed, and trying. So I'm looking at that. But in terms of like the stuff that I'm in right now, I'm heavily in home builders, which I have been now for a while. I got into the stock Trimble. You ever heard of Trimble?
I've
TR
yeah, I've
TR
heard of them. Remind me what they do again, or what
Precision
sector?
Agriculture.
Okay.
Agriculture. So like next year, I'm trying to pick out some stocks I think will have um, will start to actually benefit from AI, both top line and bottom line. So I like Trimble, but I've always liked that stock, and now I just think it has that potentially for next year. And I love these technical setups on some of these like forgotten names. So like Trimble, I'm in Tesla. That's I guess one that I am. What I'm short is Netflix. I hate that stock. I do not like the. I have no idea why Netflix is has the valuation it does. And what's great about trading Netflix is you could actually just trade its earnings report. Like if it has a beat in revenue, do not be short. If it doesn't have a beat in revenue, it's going down. And uh, last quarter, it didn't have a beat, right? And it's been going down. And now they're trying to take over Warner Brothers. And yesterday the stock was down like 5.5%. So I'm short that name against some of these long positions. What are you guys in? You have how many products do you guys have? You have four products, right? Or
Four
three?
products, yeah. So we've been on a really great run with S&P Trader over the last at least several weeks, if not longer. So we're back firmly in that positive territory on the year in that product. Looking across other products, one thing that's been interesting in the last couple of days is we're long the euro against the dollar, and you're starting to see the dollar index break down just a little bit. So if you pull up DXY, you're starting to see the U.S. dollar index weaken, breaking below its 50-day moving average. So we're at a gain on our long euro position. So we'll see how that evolves into the Fed, and then the other position we put on recently has been with Bitcoin actually buying IBIT calls on that move to the downside, and we're close to break even on that trade. If we can get a little bit more upside move in Bitcoin, I imagine we'll be
So you guys are
taking
long
that
Bitcoin.
position.
You guys are
What's that?
long Bitcoin. Are you
Yeah, we
saying
are.
you guys are long?
We are long. We got long Bitcoin. When we do that, yeah,
That's
about
funny.
about
Here's DXY. Here's the chart on DXY, long term chart. Wow, what an ugly chart, huh?
you. Hey, that's why gold is up so much this year, right there.
Exactly. Partially, I would say partially, but I think there's a good chunk of that factor built in. You guys are in IBIT. Anything else? Anything like
No,
um,
those are really the core positions we've put on here recently, other than, again, just looking every day at that spread trades.
how's performance been across these products?
We're up on just about everything for the year. Currency Wizard is at this moment close to break even, but everything else we're up on the year.
Currency has been a dead asset class, huh?
It's been hard to. I mean, if you zoom in on that chart of or of euro dollar, I mean, it's going nowhere.
So yeah, with Larry's products, I always thought like I've been around his products and just working with Larry for a while now, and I think that subscribers get the best out of it when they use. And look, I'm not on the payroll, so whatever. I'm just saying what I truly believe. I think the diversification benefit of taking all the trades from all the different products is very like if subscribers actually took all the trades from all the different products, they would have a pretty smooth ride, I think, over time. So that's something that I've noticed. But here's the chart that I pulled up yesterday on the ES futures. This trend line has yesterday. I mentioned that that's a trend line that I'm looking to buy. That was a buy yesterday. We're off that level now. Meta kickstarting things a little bit this
Yeah, I saw
morning.
up 7% now pre-market.
Yeah, let's take a look at the straddle. ES is up about 20 points. So indicative open on SPX is going to be around, let's call it 68, 68, 65. And the straddle there for today, let's take a look. I'm just simply adding the at the money calls and puts. And that's 15 on the calls, 11 on the puts. So we got ourselves a 25, 26 point straddle from current levels, and that places us at let's call it 69.05 to the top, and 25 points below would be about 53 to the bottom. So this is what the option market is pricing in as a range for today on the ES.
It
You're a
is
buyer of that straddle or a seller?
I know you prefer the Iron Condors a lot, and then Larry talks about it. We take more of a directional stance to start, and if we need to pair it with something on the other side, we'll do that. But just you kind of you come into each day with a bias, and you see what the market gives you around the open, and you look at where those premiums are, if how much reward you're collecting, so to speak, for taking on the risk, and you go from there. I mean, it's just there's several variables that you have to this is where Larry works his magic. There's a lot of variables you got to take into account at once, as the day's getting underway, and make a decision on which side you want to take.
Yeah, I'm looking at the puts for at yesterday's lows on the SPX, which were 68.10. You can't get anything for them on a put spread, so the market is pretty much saying we're not going down significantly today. So where you can get maybe some premium, I'm just looking at slim pickings, huh?
Yeah, on the S&P 500, I mean, it's definitely come in over the last
Yeah,
several sessions.
volatility has come in. I hate that. I hate that.
It's going to stay that way till you get to the Fed.
Yeah, I agree. I agree. So last thing before we go, as it's already 9:18, subscribers want to know what your outlook is for trade alerts going forward for December.
Yeah, we're very, as the name implies, opportunistic trader. We are very opportunistic. We don't want to give out trades for the sake of giving out trades. We want to give out trades that have the highest probability of working for our subscribers. And so we where we thrive the most is when you get a little bit of volatility in the market. And so that's really, when you look at our backdrop in the market and our volumes of trade. I mean, when prices are swinging more, that's when we get more active. Like, earlier in the year, we were incredibly active, especially, heading into and around the trade war. Our trading volumes tapered off since then. Not to say we haven't done anything. We've done trades since then, but so the volume of trades adjust in response to the opportunities that the market is giving us. And so, it's hard for me to sit here and say, oh yeah, we're going to see, this down in the pipeline. I mean, it's an ultimately read and react to what the market is giving you.
What about in terms of I think they're asking about like quantity of trades. Should they be looking for trade alerts You guys are, is the team going on vacation, things like that?
Yeah, well, we do have so last week of the year into the start of the year, um, we're technically offices are shut down, but we should still be able to push out trade alerts. So it doesn't mean we're completely going away, but again, it's going to be more of a read and react to what the market's doing at that time. I mean, if it's dull price action and there's nothing moving, I don't see us doing a lot. If all of a sudden this post Fed meeting, everything's in question and prices are swinging around, like there's reversal opportunities. Yeah, we might get a little bit more active then.
All right. All right. So it is 9:20. You want to close things up? Let us know what your outlook is for the trading day for the rest of the week.
Yeah, apparently Meta's given us a spark here, so we'll see. I would still watch. Kind of what we started with in the podcast is that what I would watch near term is that the average stock has been leading the way higher, and the Mag Seven type names, a lot of the Mag Seven type names have been lagging. So what Nvidia is testing its 50-day, Palantir is testing its 50-day from below. So I think those tests will tell you a lot about where the market could be headed in near term, especially as we go into the Fed next week.
All right. Sounds good. Thank you, Clint. I had a good time chatting with you. Thank you, everybody, for joining us. Have a great rest of your day. We'll see you. Today's Thursday. I won't be on the podcast tomorrow. Larry will be doing his Q&A, and I'll see you again on Monday.
Sounds good.
I think I'm going.